Hey, how's it going, everybody? So today I just want to share with you guys this gold Fibonacci strategy, this training pretty much, and some things that I've seen, and just some things I just want to share with you guys pretty much. So first things first is setting up this strategy. I'm going to delete this so you guys can see from scratch. So I'm going to delete this indicator. I'm going to go to my indicators and I'm going to add it to my chart. Signal Sniper. See, there we go, it's on my chart, so it should look something like this. I'm gonna go to the settings and first thing I want to do is turn off the Fibonacci things. Well, I'm gonna start from the top. Disable the signals, make sure this is turned off, the time filter. This is the profit wave. I like mine set for this one. You can have it set however you want, but I like it set to that. Background trend color, I'm gonna turn this off for now, but I like the bullish one blue and the bearish one black, but it turned off for right now. And support and resistance, I like to have it solid. Here's a Fibonacci. Click on that to disable it. This one's enabled. These are the trading sessions. I don't really mess with that, honestly. And then here are the fibs. I like to turn off the fib labels just because I don't really care for the labels. Maybe if you're new, you could use the labels. It pretty much gives you right here the stop loss, the low, the entry, TP. I don't really need the labels. And now we just got to set up the fibs. So the fib session, you can do it either time, Los Angeles, New York, it doesn't matter which one you choose. For example, I'm Los Angeles time, but I could use New York time if I want to. I just got to make sure it's set to the appropriate time, which would be (15, 16). That would be, if I'm in Los Angeles time, that would be what you would set it to, 15 to 16. If you click on New York, like I said, it doesn't really matter. I'm in Los Angeles, but I can even do New York. You would just set it 3 hours ahead from now, so it'd be 18, 19, and it'll be the same thing. That's set up. And what you could do is you can go back to your indicators and then add this indicator twice to your chart. And then for the second one, you do the same thing. You turn off your signals, turn that off, turn off your enable filter, go all the way down, turn off your background, disable the Fibonacci, and then enable the fibs. And I'm not using the fib labels, but you can turn that on if you want. And then the settings for the second one, this is to do it in the morning from 5 a.m. to 6 a.m. Pacific Standard Time. New York, that would be 8 a.m. to 9 a.m. Pacific Standard Time. So yeah, I'm gonna do Los Angeles just so you guys can see it doesn't really matter what time zone I'm in. And then I'm gonna turn this on and now it's gonna show me pretty much the fibs for both. Oh yeah, I don't need these arrows either, so I'm gonna turn those off. Let's see, my fibs are enabled. Oh, it's set to the same time as the ones I have right now. So 5 in the morning to 6 in the morning, and it's AM Pacific Standard Time. Click OK, and there we go, populated. And so now we can see today's trade right here. And you can this one hit TP. It actually entered pretty quick because you can see this is 4 p.m. and the candle closed right here at 4 p.m. Not at 4 p.m. but like at 4:14, pretty much 4:14 because at 4:15 this candle opened. So yeah, this was at 4. So this 15-minute candle closed right here pretty much, and then the second one closed right here and pretty much hit our TP on this candle right here, one of these two. But yeah, you can see this one hit TP. You can see this one triggered our trade, and then it pretty much reversed and hit stop loss. I've seen some people taking the trade earlier, using the pips early, 1 hour earlier, which you guys can do that as well. That one probably would have hit TP. Let me go on the 1 hour chart. Just so we can see. So yeah, today's chart hit TP, or today's trade hit TP. Yesterday's trade, you can see it reversed. That was pretty much today in the morning. But yeah, if you took it right here, if you did it on top of this candle right here, you know, it would have hit your TP right here. Your entry would have been here and would hit your TP here. If you did it 1 hour earlier, but you know, both work. Yeah, this one hit TP or hit stop loss. This one, no trade. And actually, this is the trade from yesterday. You can see that this one didn't trigger. So this trade, I didn't even enter this trade. I entered this one, and I held it all the way until the next trading session. And then, you know, it almost hit TP right here. I actually closed the trade around here, somewhere around this area before it came all the way back down. Yeah, and then yeah, so this one I didn't enter another trade over here. I literally just waited for this trade to play out. If the trade doesn't play out by the time it's the next trading session, about to be the next trading session, I close the trade, and then, you know, wait for the next one. Here's another day right here, and this one didn't trigger a trade. Oh, it triggered right here actually, and then it's stop loss right here. And this is the one at 5 in the morning Pacific Standard Time. And then here's another one right here. This is the one in the afternoon. You could see this one went straight to TP. Here's one after it, came up, came down here, didn't hit stop loss. Stop loss is right here. Came back up, and the market closed right here, so I would have closed the trade somewhere around here. I actually ended up closing the trade somewhere over here, though. I ended up trailing it just because it was Friday, and it was NFP. So yeah, and then this one, you can see this one went straight to TP. Here, this one went straight to TP. This is the one in the morning, and this one went straight to TP. This one pretty much just consolidated in this area, but didn't hit stop loss, didn't hit TP, so you probably would have closed somewhere here in a small loss. This one went straight to TP. It's not really showing the data here, but yeah, that one went straight to TP. So what I want to share with you guys too is, now that you're catching some of these trades, it's pretty much how do you know when to close the trade and stuff. Like, say the trade is reversing on you, you're gonna make sure you're on the 15-minute time frame when you're doing this. And like, this doesn't work on the Heikin-Ashi candle, so you got to make sure you're on when you're trading the gold fib strategy, you're on the regular candles, and you're gonna go into one of these. It doesn't really matter. And I'm gonna click on the settings, and I'm gonna go to pretty much my background trend color. Let me see. I want this one blue, this one black, and then enable it. And now you got this. So as you can see, if the background trend is blue, that means it's bullish. If it's black, it's bearish, the trend. So as you can see, this gold fib right here, it aligns with this. You could see it called a buy, and the background trend is blue, so that means it's, you know, it's buys. It pretty much aligns with it. It's going for longs, and so yeah, that one hit TP. And then you go to this trade right here, which this trade, you can see it entered right here. So it kind of it aligns with this because it's, you know, green. But then instead of waiting for it to hit stop loss all the way down here, you could have got out right here. See how the background trend color turned black right here? You could have just exited right here, since it's no longer bullish. And then another way too is if it crosses below this, if price closes below this bottom EMA at the bottom, like once price closes below that, you can get out. That's another way. But yeah, once the background trend turns black, you can get out right there. And then you could have pretty much avoided some of the loss. Like this one would have been about 305 ticks. So instead, you could have got out right here when price closed, and you would have lost 200 ticks instead. So pretty much you cut your losses shorter, so you don't lose the full amount. And so, like, let's go to the next trade. You can see this trade didn't activate until over here, and then, you know, still would have aligned. Background's blue. Yeah, let's go to this one right here. This one triggered right here. Background's blue, so it aligns, and then you can see it turned black right here. Once it turned black again, you can close your trade, and you would have saved yourself 114 pip loss right there, and your loss just would have been 200 ticks on this one instead of 300 plus. So you can see that's one way you can literally avoid taking some losses. So let's keep going. Look, background's green or blue, and hit TP. You know, aligns with this buy. Background's blue, aligns buy. Okay, and like some of these trades, say you held it past TP. Once it turns black again, you could get out right there if you were to hold. And then here's another one right here. Entry was right here. Background's blue, which, you know, means buys long, so it aligns pretty much with the signal. Came up here, reversed right here. You could have got out right here, and regardless, it didn't hit TP anyway. It came up to right here. If you just waited, it turned back blue right here. And then this one right here, you could see it was background was blue, and then it turned black, and then, you know, gave us a sell signal on this candle, so it would have aligned regardless, and then it hit TP pretty much. And then, you know, if you held it for longer, you pretty much could have closed right here when it turned back to blue, which it kind of went back up anyway. And then here's another one right here. Here's the entry. You know, background's blue, so that aligns perfect. Goes up. You know, you can, if you were to hold it again, you could get out right here when it goes down, or when it crosses down back to black. This is a 15-minute, by the way. I'm on 15-minute. This one was a losing trade right here. You can see signal wasn't triggered right here, which it aligns because the background is blue. So this one you could have taken it in reverse, because as soon as you got your entry, price pretty much reversed, and, you know, closed right here. Background turned black, so, you know, indicates bearish. Triggered the other pending order right here, and even though this pending order would have been deactivated because this one got active, this indicates a huge potential reversal, because this huge bearish engulfing pattern right here, this bearish engulfing pattern, pretty much took out all these candles right here, engulfed all these candles. Close below it, you could put your stop loss right here, and, you know, take it to TP or erode it until it turned blue. Let's keep going. This one would have been a tiny loss if you got out right here, about 24 ticks, something like that. If you got out right here, something like 54 ticks. So, you know, way better than losing 260 ticks. You know, so a very tiny loss right there. I'll mark that one up actually. Say stop loss somewhere around here, or right here where it turned black or something. 97 ticks. Start new. Stuff from right here, and we can see right here, entered right here. Background is also black. So this is where we got our entries. Stop loss would be right here. And, you know, that one hit TP. You know, if you wrote it down, could have got out right here when it turned blue. And then this one got the entry right here pretty much. Stop loss will be right there. That one hit TP. Here's one right here. This one was a losing one. And you could have got out when it turned blue. when the candle closed, turned blue pretty much. That one would have been a losing trade. Here's a winning trade right here. Here's another one right here. And what you're pretty much what this is trying to do is pretty much find which way the direction of the New York session is going to go. And the way it does that is the 5 a.m. This one right here, 5 a.m. all the way until about 6 a.m. Well, before that, like 4:59 a.m. I mean 5:59 a.m. That 1 hour, that's the start of New York session. 5 a.m. is the start of New York session. So at the start of New York session, for that 1 hour, it's trying to find that breakout of that 1 hour session to find the continuation of the rest of New York session. That's the way it works. And then for 3 p.m., you know, it's just trying to find that pre-Asian breakout, pretty much. You can see a lot of the times it does hit TP. That one hit TP, this one hit TP, this one hit TP. Let's see, this one didn't trigger any trade, so no trade on this one. You can see the entries right here, and no trade. Here's a new trading day. So you want to be out of the trades before the new trading day, or mostly on futures, because on futures it's you can't be in a trade. You know, you can't hold a trade longer than the next trading period day. Yeah. For forex, you could still hold it, but sometimes I just close it anyway because I'm going to wait for the new trade of the day. This one hit TP. What about this one? This one hit TP. So notice how on this one it turned blue. I would not close it yet, simply because you haven't even gone past this first stop loss, and it's the first candle that's crossing above these EMAs right here. So I would wait for this next candle and see if it continues pushing up. If it continues pushing up, then I'd consider closing. But see how it pushed down? Okay, now I'm gonna wait for the next candle, and we ended up price is continuing to push down. Even though background is blue, I want to wait for price to see what happens, and then you can see it turn back red again right here and hit TP. So yeah. Let's keep going. I want to get through a lot of these so you guys can see. Let's see. Because I really want you guys to see the picture of this. This one hit TP. This one hit TP. This one was a big one. Yeah, this one was huge. 626 tick stop loss. 464 ticks. And this one hit TP. Let's see. This one, it was close, but then came back down, and you would have got a small loss if you got out right here. Yeah, very small loss. 87 ticks compared to what you originally were risking, which is 290 ticks around there. So yeah, this one would have been a small loss right here. Or let's just say you waited till it turned black and then it kept pushing down like right here, almost to the bottom. Still 188 ticks, better than losing the full 290 ticks or whatever. Look, this one was so close to hitting TP right here. Stop loss right there. Or if you waited till, you know, background turned black, it was this candle, say you waited 1 or 2 more candles, you could have got out right here. This third candle right here. So you don't lose the full amount. Even if you did, you know, with the strategy, you'll always make it back. Majority of the time, you'll always make it back. Because it just wins pretty frequently. Let's see, this one won too. This is already before Christmas. Yeah. I'll stop around here. Let me see. Entry was around here. You can see turn black right here and just completely shut down and hit stop loss right there. I mean, you could have got out early, of course, if you got around the black area right here, or when it started pushing down, just to cut some of that, cut your risk. You know, the reason you want to do that, or why it helps out a lot, is you cut some of that risk. You know, so say you're risking 200 pips, 300 pips, and you get out at 150 pips or ticks. I mean, sorry, ticks or pips or whatever it is you're trading. Because this works on, you know, forex and works on futures. But yeah, whatever it is you're trading, whatever, you can cut your risk. So say you're risking $100 in that trade, but instead you lose 75 because you took some of that risk off. $50. Well, every time you take some of that risk off, it adds up on other trades. So say you take 3 losses in a row, and instead of losing $200, $600, well, maybe you lost 150, 150, 150, you know, and you lost 450 instead of losing the full $600 amount. So you're pretty much, you know, taking some of that, losing some of that risk. You're cutting some of that risk off, and you know, you're still leaving your TP the same. That way, you're making it back, making more back. Hopefully that made sense. Here's another one right here, and it aligns because background turned black. If background turned black, call the sell signals. You know, that aligns. Background's green right here, or blue. That aligns with the buy signal. We'll keep going. Oh yeah, this one hit TP still. Entry was right here. Stop was right there. TP was hit right here. We'll just stop right here. This is Monday, week of Christmas. Alright guys, actually I want to count all our wins that we have so far, and then I'll show you the next part. So pretty much I just showed you how to use the goldfish strategy, you know, which times to set it up, how to set it up, and then I showed you how to cut your losses early so you don't lose the full amount. You know, it's when it switches from blue to black, or when it switches from black to blue. And now I'm going to show you pretty much how to add on to your position if you want to, because I've seen some people using this strategy, because I'm using it from, well, in New York, I'm using it from 5 in the morning till 6 in the morning Pacific Standard Time, and I see some people are using it 1 hour earlier from 4 in the morning till 5 in the morning Pacific Standard Time. And you can pretty much potentially take capitalize on both of them, and I'm gonna show you how. So here's the 5 a.m. right here, and here's 5 a.m. is right here. Yeah, 5 a.m. is right here. So this would be the high. And then the low, this is 4 a.m. right here. So this would be the low. So for those of you who have your fib set to 1 hour earlier, your fib will look something like this. You know, once you get your entry here, you pretty much get an entry here, and then you have your second fibs lined up, and that's 2 entries. That's 2 buys right there. And first one gets out right here, that one hit TP, and then the next one hit TP right here. So you see you could have got 2 trades right there. And here it is again. This is 6 a.m. right here. 5 a.m. to 6 a.m. Here's the high, here's the low. So those of you who are doing it 1 hour earlier, here's 4 a.m. till 5 a.m. right here. So, you know, your fibs would look something like that. So your TP would have been hit right here, and then you would have had another entry right here, and then hit TP right here. So you see that? So you caught 2 trades right there, back to back. One hit TP, the second one hit TP. You know, here's the one for 3 p.m. This one hit, this one didn't hit, this one you could have got out right here, and then here's the next one right here, which, you know, hit TP. If you did this 1 hour earlier again, here's 5 in the morning, so your low would be right here. Your highest 4 in the morning would be right here. The way that would look would be something like this, actually, depending on how you have it set up, but that one would have hit TP as well. But yeah, guys, so that's how you can pretty much capitalize on those trades. You just pretty much adding, because some of you guys are taking it 1 hour earlier, so that's one way to capitalize it. And both of them work because the one that you get, the trade that you guys are taking early, the reason both of them work is because you're taking it the last hour of London session, so you're pretty much getting that last hour of London session. You're waiting for the breakout of that in New York session. So you're pretty much that would be your London range for you, that 1 hour, the 4 a.m. to 5 a.m. and then you wait for the breakout in New York. And then once it hits New York, that 1 hour from 5 in the morning till 6 in the morning, that's the first hour of New York session. So when you wait up for a breakout of that, you're waiting for a continuation to that side. You know, whether it breaks to the up or to the down, you're waiting for a continuation to that. So that's how you're able to capitalize on both of them. Yeah, here's the big one right here. That was here's 5:30 in the morning. Here's 5:15. Here's 5 in the morning right here. 5 in the morning. Let's say 4 a.m. 4 a.m. is right there. So this would probably look like something like that for you guys. So then this one would have hit TP for you guys right here, and then you would have got another entry right here, and that would have hit TP again. So you see how you guys can capitalize more than once on these trades on the Fib strategy. So you guys can use it back to back on that. Yeah. And actually, I want to count up these wins and losses just to see what we're looking at. So I'm gonna do that right now with you guys. Let's see. Started from January. Oh, it took me all the way back. Yeah, I'll start it from here. The week of December, Christmas. So first trade hit TP. This trade hit TP. This trade was a loss. This trade was a loss. See, this trade was a loss. So that's 3 losses right there. This trade was a win. That trade was a win. This trade was a win. This trade was a win. This trade was a win. That trade was a win. Oh, dang. That trade was a win. This trade was a win. This trade was a win. Keep pressing the wrong thing. This one was a loss right here. This one was a win. This one was a win, tiny one right there. This one was a losing trade, and this one was a losing trade, so that's 2 losses right there. This one was a winning trade. This one was a winning trade. Oh. This one was a winning trade. This one was a winning trade. Losing trade. Losing trade. I won this trade, but what did you say? Losing trade. And then winning trade. So we're looking at 17 wins and 9 losses. So this is winning 66% of the time, and that's just the duration of this time. Because if we go all the way to the back to the month of August, that month it was like 17 wins and 3 losses, and that's just, you know, the 3 p.m. to the 4 p.m. one session, not including the other session. So, you know, it's very powerful, because instead of like going for 0.75 R like it usually is, now you're going for 1.1 R or more, because you know, some of these trades you're cutting your losses early, like this one right here. You cut your losses right here at 75 ticks. You know, if it went to your TP, your original TP, you know, even though you're risking, you're aiming for 0.75, you know, you cut your loss. So now that you cut your loss, your R, it pretty much makes your RR bigger, because you're not taking the full length stop loss. I want to give you a quick rundown on risk management and how it works on this strategy, because this is how it should be used. So it is best to use the same lot size on every trade, regardless of your stop loss size. The goal is to be in profit by the number of pips or ticks at the end of the month, not RR. So only increase your lot size after 2 or 4 weeks if in profit. 4 weeks is recommended. And then if in profit, then you scale up and use that new lot size for 2 to 4 weeks again. If you adjust your lot size based on the amount of pips, you are now trading based on percentages or a fixed risk. That is not how this system works. So even if you are in profit, say a certain amount of pips, at the end of the month, you could be in a loss or break even because you didn't follow the rules. For example, right here, let's start with, say you're in profit 700 ticks or pips, whatever it is you're trading, or both if you're trading both. But you had 12 wins and you had 9 losses. Well, keep in mind that you're when TP gets hit, you're risking usually you're going for 0.75 R on every trade is 0.75 R. So, you know, you're risking $100. You know, you risk $100 to make about $75. So if you had 12 losses or 12 wins, you made $900. You know, 75 times 12 would be $900. And then say you had 9 losses, you know, you risked $100 per trade. Well, you lost 900. You didn't lose any money, but you also didn't make any money. You were break even, but you were in profit 700 ticks. So how could you have made money off these 700 ticks? Well, the simple solution would have been to just use the same lot size on every trade. If you use the same contract or lot size on every trade, for example, if you use 0.10 on every single trade, this would have been $700. You know, if you did 0.1, because that's a dollar per pip, so that would have been 700 pips, 700 ticks or whatever, and that would have been $700. Same thing if you're using one contract. You know, that 700 ticks would be crazy amount of money on there. So yeah, hopefully that made sense, guys, and why I do it like this. If you guys do want to trade it the other way, where you guys want to scale up your accounts, you know, trade based on RR percentage, I recommend having 2 accounts. You know, one that you use, you know, like that you trade it completely like this using this system. You're executing it to your trading plan, to your T. You're following your rules. You're, you know, pretty much sticking to the way you're supposed to be trading, which is, you know, like this. And then you have a separate account, and the separate account could be the one that you compound, or, you know, you're taking bigger risk or whatever. And the reason you can have 2 accounts is, one, that you can have a separate account to do that with, and then this account could be, you know, your safe account, the one you're using proper risk management and you're safely growing it and, you know, building it up for a very long time. Because when you guys get to that point when you guys have a huge trading account, guys, the amount of profits would be insane. Like, instead of, you know, 0.10 and this being $700, this could be a $7,000 trade for you guys. It's all about just being consistent, staying the course, and, you know, following the game plan pretty much. I hope you guys enjoy this, and I'll see you guys on the next video. Peace.